Forex Indicators Lesson 7, Forex Bollinger Bands. Bollinger Bands are an indicator of volatility. They consist of a moving average as a center line and two price channels above and below, which are called the bands. When the bands expand, there is a price action and volatility is higher. Whenever the band contracts, it shows a market consolidation. This indicator acts as a measurement for overbought and oversold conditions in the market. Therefore, when the price touches the upper band, it's considered overbought, triggering a sell signal, and when it touches the lower band, it's considered oversold and triggers a buy signal. However, remember to always trade with the prevailing trend. Whenever the price is indicated downtrend, you should start looking for selling entries around the upper band, and the price target should be close to the lower band. When the price is trending upwards, you'll only look for buying entries at the lower band and set your price targets at the upper band.